First session, it will be for the CCGST batch, certificate course of GST, the basic course.
Sir, you are live now.
Okay.
Thank you, sir.
So shall I start?
Please, sir.
A very good evening to you all. Today we would be discussing about various things with regarding to income tax filing, with regarding to the selection of the new tax regime or old tax regime. So from this assessment year 24-25 regarding to previous year 23-24, lot of changes was being proposed in budget 2023. So those budget amendments with regarding to that section 115 BAC by inserting 115 BAC subsection number 1A and 115 BAC subsection number 6. By those amendments, there are radical changes as far as this old regime, new regime taxations are concerned for individuals, HUF, AOP, BOI, artificial juridical persons. So we would be discussing those changes regarding to those selection, those opting in, opting out from new to old, old to new and all. Then along with those new and old provisions applicable to individuals, HUF, AOP, BOI and artificial juridical persons, there are schemes, new regime schemes applicable for corporate associates, companies, for cooperative society. Those things also we would be touching upon it. So our basic concentration would be on towards the taxation structure, how to opt in, how to opt for basically for individuals and the related associates only. So what is so important about this selection? So before on to this new scheme, old scheme, let us go on to the intention of the lawmaker behind this introduction of this new scheme, so-called new scheme 115 BAC in Finance Act 2021. We know, even though the numbers are too low comparing to the actual associates who are declaring actual deductions, actual exemptions by claiming the refunds and all, there are certain unethical practices existing wherein those deductions which are not actually eligible unethically, those deductions are being made by those associates. Non-applicable exemptions are being claimed in order to reduce the taxes or to get those TDS as refunds. Especially in employee category persons, there is an increasing trend whereby there is an pool which do have got this idea of getting refunds which are actually ineligible by claiming bogus deductions, bogus exemptions, by reclaiming back all the TDS which have been deducted. So in order to curb those unethical practices only, this novel idea of two taxation regimes, new regime and old regime, were being introduced in 2021. But somehow the actual persons who opted for new regime was not up to the mark as expected by the finance ministry. So thereby year after year, 22, 23 and 24, they had added on various exemptions, various extra privileges for those who are opting for new regime. In this Finance Act 2023 also, we may see there are a lot of extra privileges given to those who are going to opt for new tax regime. So for which actually that the basic thing that has been given for salary class is that extra standard deduction, 50,000, which was not eligible for the last 2 years. Now the persons who are opting for this new regime again can get that 50,000 standard deduction. Plus there is a slight change in that new tax regime tax slab rates also. Instead of 2.5 to 5, they have increased the basic slab from 2.5 to 3. And there is an increase in that rebate under 87A also, which was 12,500, both eligible for new and old till the last assessment year 23-24. But from this assessment year 24-25, instead of 12,500 being the rebate, it has been increased to 25,000 rupees. 25,000 rupees to those who are going to opt for new tax regime. So in order to increase the acceptability of this new tax regime, lot of tax reliefs are being given to those who are going to go for this new tax regime. All these practices, all these things are being done in order to curb those or in order to curb those tax evasion practices, unethical practices by claiming bogus deductions. Nowadays, the income tax department had started sending notices even to salaried class persons who have claimed higher HRA exemptions, who have claimed HED extra deductions, ATC, GGC, political party deductions, HEDDB, medical related treatment for relatives deductions. So those deductions, in order to check the authenticity of those transactions, the department have started sending the notices. So in order to get away from that notices, the only thing is we have to revise those returns using that 139.8A, pay the tax, extra tax 25% or 15% of extra tax 140B finally to ask your assessees to pay if they have taken those bogus deductions. Otherwise, you would be using that opportunity either to do those bogus things with 139.8A option, updated return option. Once that time limit is again over, the department would be taking the cases for scrutiny. Online scrutiny, it would be faceless scrutiny, it would be. So definitely yes, when we cannot substantiate those deductions by proper evidences, proper documentations, etc. Definitely yes, penalty, penal provisions would be there. The extra tax along with penalty under 270A, which would be up to 200% of total tax evaded, plus interest up to date also would be charged. So huge penal actions could be initiated by the department for those persons who are claiming bogus deductions. So with this, actually the department, in order to get away with these bogus deductions, they are trying to make the assessees to opt in for this new regime by giving more and more privileges to those persons. And with that view, actually, till this assessment year, till the assessment year that had been over, that is assessment year 23-24, these two tax regimes out of which the old regime was being termed to be as default regime, and this new regime was being termed to be as opt-in regime. But right from this assessment year 24-25, in order to increase the acceptability of this new tax regime, what has happened is the department, the Finance Act 2023 has amended this section 153 in DAC in such a way that the new tax regime would be the default regime, and this old regime would be, so-called old regime would be the opt-in regime. In other words, you have to file an extra form. If you are a business or professional income holder, then you have to file an extra form in order to opt for this old regime. Even though for till this assessment year 23-24, if you are going for old regime, if you want to still continue with that old regime, again you would be required to file a form in Form 10 IEA. All those things I would be discussing later. But anyhow, the radical shift, the first and foremost point that we have to get from this discussion is the first and foremost thing from this assessment year 24-25, this old tax regime would be the opt-in regime, and the new tax regime would be the basic default regime. So that is what the first thing that we have to understand. So within which, so what are all the things that we have to do? What were the things that we were doing till now? That thing definitely yes, we would be discussing later. But anyhow, as an introduction, first and basic thing that we have to know is this: from this assessment year 24-25 onwards, new regime would be becoming the default regime, and the old regime, if you want, you have to opt in. Even though you are filing your return regularly on old regime basis, still assessment year 23-24. Again, how? If you want to still continue with old regime or want to opt in for old regime from new, you have to follow those procedures as prescribed in subsection number 6 of 115 BS. So before which I was mentioning whether these new tax regimes are applicable only for individuals. If you see, the answer is no, definitely yes. For individuals, for HUF, for AOP, BOI, for artificial juridical persons, this 115 BAC option can be opted. So this 115 BAC 1A has been inserted instead of that 115 BAC 1. So what is the fundamental distinction between 115 BAC 1 and 115 BAC 1A? If you see, again in this Finance Act 2023, this 115 BAC 1A has been inserted. So old or before this insertion of 1A, 115 BAC 1 was applicable, wherein the slab rates was 0 to 2.5 lakh, 2.5 lakh to 5 lakh, 5 lakh to and all, But now, instead of that 0 to 2.5 lakh, the regime has been, or the tax rate has been changed in such a way that 0 to 3 lakh, up to 3 lakh income, there would not be any tax at all. So this new tax regime, you know, there is no distinction between the senior citizen, super senior citizen, nor with that of other types of citizens who are having age less than 60 limit, wherein all those persons would be getting that basic exemption limit of 3 lakh rupees. So that 1A has been inserted. Those slab rates and all we would be discussing later. But anyhow, for individuals, for HUF, for AOP, BOI, and artificial juridical persons, they can have that default regime under new regime to be as 0 to 3 lakh, 3 lakh to 5 and all. So in that way, 3 lakh to 6 and all. So that way that 1A in section has been inserted. So these persons definitely can opt for what? New tax regimes. Then apart from this individual HUF, AOP, BOI, and AJP, if you see, company assessees are also eligible to get new regime tax rates under two sections, 115 BAA and 115 BAB. What is the distinction between this 115 BAA and 115 BAB? If you see, for this section 115 BAA, the rate of tax has been reduced to 22%. So now totally for domestic companies, there are 4 types of slab rates. One, normal tax slab rates at 30%. Another one, those assessee companies whose turnover for assessment year 21-22 is less than 400 crores. If their turnover is less than 400 crores, instead of 30%, they would be eligible to get 25% to be a tax rate. So those assessees, company assessees who are having turnover more than 400 crores, then 30% would be the flat tax rate on the income. Then if your turnover for the assessment year 21-22 is less than 400 crores, definitely yes, you would be eligible to get a reduced tax rate of 25%. And if you are going for both those options, 30% options or that 25% option, all the deductions, all the exemptions you would be eligible with. But if you are going for this new tax regime option, just as if 115 BAC for individuals, HUF, AOP, BO, and AJP, if they want to opt in for this, or if they want to go with this new tax regime, some of those deductions, some of those exemptions, they are not eligible with. The same conditions are there for corporate assessees, company assessees also. If they want to go in for this 115 BAA or 115 BAB, they would not be eligible to get various deductions and exemptions. So what is the distinction between these two new regime sections, 115 BAA or BAB? If you see, the rate of tax under BAA is 22% and BAB is 15%. Then the extra condition for 115 BAB that it is only applicable to those specified manufacturing entities who do have got that startup registration. Then only you would be eligible to get for that 115 BAB. Otherwise, you would be eligible to participate in taxation by waiving of all those exemptions and deductions under 115 BAA. So that is the fundamental distinction between these two structured tax rates, 22% under section 115 BAA and 15% under section 115 BAB. So this is applicable to company assessees. So for company assessees, there are 4 tax rates. Old regime having 400 and less in 21-22, 25% is slab rate. If your turnover is more than 400 crores in that assessment year 21-22, then 30% would be the slab rate. Then if you want to opt in for this new tax regimes, 115 BAA with a 22% tax rate and 115 BAB with a 15% tax rate is also there. So this is for company assessees. Then if you see for cooperative societies also, there is a new section that has been introduced for them. Without claiming those deductions and all, they can get with the lower tax rate. Instead of 0 to 10,000, 10%, 10,000 to 20,000, 20%, 20,000 and above 30%. This is the normal slab rates which is there for cooperative society. So instead of opting for those normal slab rates, the cooperative societies can opt in for this 115 BAD, wherein the total flat rate of tax would be 22%. 22%. That also, if you want to go for these new tax regimes, you have to get away, you have to sacrifice various deductions and exemptions. So that's what with regarding to cooperative society. Then I was mentioning about Hindu undivided family, AOP, BOI, and AJP. They are also having 2 tax regimes, old regime as well as new regimes. Old regime, that is 0 to 2.5, 2.5 to 5, 5 to 10, 10 and above. the same thing which is there for non-senior citizen individual assessees. Same slab rate is applicable for HUF, AOP, BOI, AJP if they are going for that old regime taxation system. But if they are going for this new tax regime system, that thing I was mentioning 0 to 3, 3 to 6 and all, that would be also be eligible for this category of persons, provided those exemptions and deductions they are going to sacrifice. So all these assessees, individual, company, cooperative society, Hindu undivided family, AOP, BOI, as well as artificial juridical person, all these assessees are eligible to opt in for all these new taxation regimes under respective sections that I was mentioning till now. But for this partnership firm, including limited liability partnership and a local authority, till now there are no such an option in order to opt in for those new tax regime. For them, this 30% flat the tax rate. So this is what about applicability of new regime tax rates for various categories of assessees, right from individual till local authorities. So this is what about different types of new tax regimes, from which let us concentrate more on individual sort of new tax rates, amendments, applicabilities, various deductions that they have to sacrifice. All those things definitely yes, we would be trying to discuss now. So any doubts in between, definitely yes, the learned participants can text in your question and answer box. Duly the answers would be given, and finally 10 or 15 minutes would be granted to discuss any other points that I had left apart or any other doubts. We can definitely ask in that question and answer chat box. So now I was mentioning this point at the time of initiation itself. From this assessment year 24-25, this old taxation regime, so-called, would become an opt-in regime, and this new tax regime would be the default regime. That is the fundamental change which happened right from this assessment year 24-25. So what is so important regarding this amendment? If you see, this amendment definitely is backed with a form 10IEA is the new form that the assessees have to file in order to opt in for this old regime if you want, or opt out from this new regime if you want, or also from opting out from that old back to new again. So in order to get into that new regime, till assessment year 23-24, the form was there and the name being 10IE. So this 10IE was the form which was applicable till now. Till now in the sense, till this assessment year 23-24, this form 10IE was applicable, and that legal backing of this 10IE was from section 115 BAC 5. But now right from this Finance Act 2023 or right from this assessment year 24-25, this section itself has been repealed, subsection has been repealed in such a way that new subsection 6 has been inserted. But all the peculiarities which were there for this subsection number 5 is almost applicable for this subsection number 6, except here till assessment year 23-24, old regime was the default regime, and if you want to get out from old regime, then you have to file this 10IE in order to get into new regime. Then again, if you want to get back from new regime to old regime, you have to again file this form 10IE. Various restrictions were there, time limits were there. All those restrictions and time limits which are applicable to, or which were applicable to this subsection number 5, would be equally applicable to those persons right from this assessment year 24-25 also. Only that fundamental change that this form in 10IEA, it has been notified on 21/6/2023, has to be filed instead of 10IE by this legal backing subsection number 6 by this Finance Act 2023, and right from this assessment year 24-25, that is with effect from 1/4/2024, what happens? Instead of filing 10IE, 10IEA has to be filed for those assessees who want to go with old regime taxation rate. So now the question may arise, till assessment year 23-24, I was filing returns under old regime only. Now again, I want to go with old regime only. Whether I have to follow this 10 IEA form? The answer is yes. If you are having business and professional income, if you want to if you want to file your income tax return with the normal tax regime or old tax regime, definitely yes. You want to file this 10 IEA. So I was mentioning all the peculiarities, all the similarities of subsection number 5 are there in subsection number 6 also with regarding to filing of 10 IEA. What are all those similarities? First one, if you want to opt in to this old regime, you have to file that form in 10 IEA within 139 one time limit. So section says on or before the due date specified under subsection number 1 of section number 139 for furnishing the return of income for such assessment year in case of person having income from business or profession, and such option once exercised shall applicable to subsequent assessment years also. So right from this assessment year, say 24-25, if you want to opt in for old regime, you have to file the form in 10 IEA if you are a tax audit assessee on or before 31st of October. If you are a non-tax audit assessee on or before 31st of July. If you are having those international transactions wherein the report from an accountant is required, 30th of November. These are the 3 due dates under 139(1). So if you want to opt for this old tax regime right from this assessment year 24-25, if you want to opt it in right from this assessment year 24-25, then you have to fill this form 10 IEA on or before this due date 139(1). First thing. Then if you want to opt out, say once opting for this assessment year, you cannot come back again to this new tax regime. But definitely yes, in next assessment year, you can come back again to this new regime. For which again this form 10 IEA, in order to withdraw this option, you have to file. That also you have to file within this 139(1) time limit. Second peculiarity. So in order to opt in, also in order to opt out from this old regime, opt into old and opt out from old, definitely yes, that option has to be exercised within 139(1) time limit. Then once you opt in, again you opted out, then during the lifetime, you cannot again go back to old regime, provided you are not having any income from business or profession. So if you are not having business or a professional income during the year, then there is no, or those persons who are not having business or professional income, there is no requirement to file this 10 IEA at all. First thing. Suppose I am only having salary, I'm having some capital gain, I'm having some bank interest and all. Whether I have to go for this 10 IEA form in order to opt for old regime, the answer is no, you need not. But if you are having this business and professional income, definitely yes. If you want to go for this old regime taxation, before 139(1) time limit, you have to file this form in form 10 IEA. First thing. Then if you want to get out from that old regime, again you have to file that form saying in 25-26 if you want to follow this new regime which you felt better than that of old regime, then definitely yes. During that time you have to file again 10 IEA on or before 139(1). So next question. This assessment year 24-25, I had went down to select this old regime. I am having business income. On or before 31st of July, I have filed that form 10 IEA. Next year again, whether I want to file that 10 IEA, the answer is no. Once you have filed this 10 IEA, until you are going to withdraw from that scheme, you need not file that 10 IEA again and again, even though you are going for this old regime. Why? Because once you have selected for the next subsequent years also, you are set to have been included under old regime system only. Only at the time, if you want to withdraw back from that old regime, you have to again file what? 10 IEA. Then, if you have withdrawn, if you are having business and professional income, if you have withdrawn from that old back to new, then again, if you want to go back to old, till you are having business and professional income, you cannot go back. In the year wherein you are not having business and professional income, that year only you can go back to that old regime if you wish to. These are all various fundamental changes, I would call fundamental changes which had happened right from this assessment year 24-25. For this assessment year 24-25. So all the other things in the sense, apart those standard deduction changes, apart from those rebate changes, apart from those marginal relief sort of changes, all those deductions, all those exemptions which were not eligible for new tax regime tax of this still would be continuing. Apart small changes, all those changes we would be discussing definitely for sure in the next 1.5 hours. Anyhow, so keeping apart those deductions, keeping apart those exemptions which are not applicable for new tax regime holders, the fundamental thing, fundamental amendment from this Finance Act 2023, which is applicable from this assessment year, previous year 23-24, assessment year 24-25 is, if the assessee is having business and professional income, if they want to get those deductions, those claims, those exemptions, everything, definitely yes, they would have to file this form 10 IEEA on or before that 139 one-time limit, which is 31st of July, 31st of October, or 30th of November on the basis of assessees turnover status, tax audit status, international transaction status. So this is what about the fundamental change. Fundamental change number 1 has been 115 BAC1 has been repealed, 1A has been inserted. The change is instead of 0 to 2.5, now it is 0 to 3, and some slab has been also been changed. First thing, slab change 1A. Second thing, subsection number 5 has been repealed. Subsection number 6 has been inserted. So subsection number 5, old regime was default regime. If you want to opt in for new regime, you would be required to file 10 IE. Now this 10 IE option has been done away. Now this subsection number 6 has been inserted in such a way that 10 IEA is a new form notified by the department, wherein if you want to opt in for this old regime, you would be required to file this thing on or before 139.1, and all those restrictions and all which was applicable for 5 is applicable here for subsection number 6 also. Now, for individual, HUF, AOP, BOI, artificial juridical person, these slab rates are there. So we know for those old regime persons, as far as individuals are concerned, 3 types of slab rates were there. For citizens who are having less than 60 years of age, 0 to 2.5 nil, 2.5 to 5%, 5 to 10 lakh, 20%, 10 lakh and above, 30% was the slab rate. So all those slab rates which was applicable to 23-24 would be again applicable for 24-25 also. There are no changes. For super senior citizens also 5 lakh, senior citizens 3 lakh. The tax would be nil, the remaining slab would be the same. And these slab rates for an individual, they are a resident, then only this would be applicable. If you are a non-resident, then if you are a super senior citizen, then increased 5 lakh would not be applicable. The basic first thing, less than 60 age, 0 to 2.5 would be only applicable. If you are a non-resident, so you are a super senior citizen, non-resident individual, first slab rate 0 to 2.5 lakh nil, 2.5 to 5% only would be applicable. For resident super seniors, resident seniors, then only this enhanced slab rates would be applicable. We know. Then, what is so different in this slab rates? If you see, I was mentioning, okay, this is the older one anyhow. Up to 3 lakh, this was the slab rates which was applicable till assessment year 23-24, right from this assessment year 24-25, the slab rate 0 to 3 lakh it is nil. Instead of 2.5 lakh which was applicable for that last financial year, 0 to 3 lakh it would be nil. 3 lakh to 6 lakh it is 5%. 6 to 9 lakh it is 10%. 9 lakh to 12 lakh it is 15%. 12 lakh to 15 lakh it is 20%. 15 lakh and above it is 30%. So instead of this new slab rate which is applicable for till 23-24, it has been raised up to 3 lakh rupees. So 0 to 3 lakh it would be nil. 3 lakh to 6 lakh it would be 5%. 6 lakh to 9 lakh it would be 10%. 9 lakh to 12 lakh it would be 15%. 12 lakh to 15 lakh it would be 20%, and over and above 15 lakh it would be 30%. So these are the new tax regime slab rates. Apart from these basic slab rates, those special rate of taxes, 111A, which is there for short-term capital gain with STT securities, that 15% would be applicable both for old and new regime holders. Then 112, long-term capital gain on all other assets. 112A, those long-term capital gain on securities with STT up to 1 lakh nil and over and above 1 lakh 10%, that would be applicable. Then 115 BB, if you see that lottery winning, race horses, gambling, puzzles, etc., that 30% flat would be applicable both for new and old tax regime holders. Then that online game 30% is been inserted in this new Finance Act 2023 also would be applicable 30%. So there are no changes as far as this special rate of taxes are concerned on those income. Whether you are going for this old regime taxation or for new regime taxation, the rates would be one and the same. Then the subsection number 2 to section number 115 BAC. So subsection number 2 to 115 BAC talks about what are all the deductions, what are all the exemptions that these assessees have to sacrifice. In other words, if you want to file your returns as per new tax regime provisions, you would be required to sacrifice this many deductions, this many exemptions as mentioned in this subsection number 2. So I was mentioning subsection number 1A has been inserted instead of subsection number 1. In that 1A only, the new slab rate I was mentioning 0 to 3, 3 to 6, 6 to 9 was been applicable. So for those new tax regime opters, definitely yes, these deductions, these exemptions, you would be required to sacrifice. Which are all those deductions? In this slide, section-wise, we would be mentioning. In the remaining slides, definitely yes, one by one section, one by one head, we would be discussing separately. But now for a bare idea, definitely yes, let us see what are all various deductions, what are all various exemptions that the assessee have to sacrifice in order to opt for this new tax regime. If you want to continue with this default regime, what are all the things that they have to waive? First thing, we know that section number 10, clause number 5. Section number 10, clause number 5, with regarding to leave travel concessions given by those companies within 4 years, block years, 2 times you can have those leave travel concession leave along with your family members you can have. So those amount given by, those allowances given by your employer for meeting those traveling and boarding expenses, you can claim those exemptions in 10.5. So that 10.5 LTA would not be eligible to for those persons who are opting for this or going with this default regime 115 BAC 1A. Then 13A, 1013A with regard to HRA, house rent allowance, wherein any house rent allowance are being given by employer to employee and the employee are residing in a rented house. Those exemptions, those 3 figures whichever is lower, that can be claimed by the assessee under section 1013A. So if you want to go with this new tax regime, that HRA exception 1013A would not be applicable to you. Then various exemptions under section 1014(1) and 1014(2). So 1014(1) prescribes various allowances which are exempted for those employees which have been used for that specific allotted purposes. Say conveyance allowance, daily allowance, traveling allowance, uniform allowance, etc. If you are spending those allowances for those specific purposes, specified purposes, up to the amount of spending for that purpose or that allowance, whichever is lower, shall be then exempted allowance, only the residual amount would be held to be taxable. So that 1014(1) allowances are there, exemption allowances are there. Then 1014(2), apart from this 1014(1), on the basis of actual utilization exemption, there are specific exemptions in form of children hostel allowance, children education allowance, Avanji allowance, transportation allowances, etc. So those 1014(2) allowances are there. So that 1014(1) allowances, except few in the sense conveyance allowance, daily allowance, then that traveling allowance are still eligible for new tax regime holders also. So apart from few, all the others, uniform allowance, research allowance, servant assistant allowance, etc., would not be eligible for this new tax regime holders. So that 1014(1), out of which 3 or 4 are eligible for new tax regime holders, apart from which you have to waive it. Then regarding this 1014(2), no allowances would be eligible to you. Then for those who are working abroad, those fully exempted allowances in form of judge, in form of sumptuary allowance, etc. If you are an citizen who is working for government of India abroad, and if you are receiving allowances to work abroad, that allowance again can be an exemption for those persons who are opting for new regime. So apart from these 3 or 4 allowances, all other exempted allowances are not being allowed to be as an exemption for those who are going to opt for this new tax regime. I would be again discussing on to those sections in detail again. Then with regarding to 32 and all, we know those persons whose income has been clubbed, minor income has been clubbed with their parental income. For those assessees, 1,500 rupees an exemption is being granted. That is not applicable if you are going for this new regime. Then those exemptions in 10AA for SEZ related persons, special economic zone related persons, 10AA holiday periods are there. So those sections are not applicable if you are opting for this new regime. Then if you are a salaried employee, again, if you are having those professional tax paid by employee, if you are a government employee, if you are having entertainment allowance, that 16 to 16(3), those deductions are not applicable if you are going for this new tax regime. So that's about section 16, clause 2 and clause number 3. And the peculiarity from this assessment year 24-25, earlier, if you are a salaried employee, if you are then that standard deduction at least 16(1), 50,000 was also not at all applicable. But right from this assessment year 24-25, irrespective of whether you are going for this new regime or old regime, that 50,000 rupees you would be eligible to get. So the 16(1) has been excluded from this exemption excluded list, wherein 16(1) is an eligible deduction. 50,000 standard deduction is an eligible deduction right from this assessment year 24-25 for those salaried employees who are going for new taxation regime also. Then after this salaried sort of a person's deductions and 10AA tax holiday related thing, if you go by income from house property section, then that 24B with regarding to self-occupied property. 23(2) meaning self-occupied property. So if you are having that self-occupied property, you cannot deduct that 2 lakh rupees or 30,000 rupees on the basis of those deduction eligibility conditions. So that 2 lakh or 30,000 you would not be eligible to get if you are having self-occupied property. But for let out property, definitely yes, you can have that deduction. That deduction, interest on loan without any limit, you can deduct, but you cannot set off or carry forward with some other heads of income, only the restriction. But for the time being, for those self-occupied property sort of person, definitely yes. If you are opting for this new tax regime, interest paid on home loan, self-occupied property, that 2 lakh limit or 30,000 rupees, you cannot deduct. And if you are having income from business and profession, various deductions in form of additional depreciation, specified business or those investment allowances, etc. Those deductions are not applicable for those persons who are opting in. All those sections definitely as we would be discussing later. So those business persons, this many deductions, this many allowances were being eligible only for old regime opters, not for new regime opters. Then if you see for with chapter 6A deductions ranging from ATC to ATU, only three deductions are eligible for new tax regime holders. First in form of ATCCD2, employer's contribution towards NPS, National Pension Scheme, employer's contribution. That limit, that amount would be included under the head salary first. Then you can get that deduction as per those limits. ATCCD2 is eligible even though you are opting for this new tax regime. So first deduction. Second deduction relating to ATCCH Agnivir scheme. So if you are contributing to that Agnivir fund, that amount also would be eligible for deduction. Second one. Then the third and final deduction as far as new old regime, new workers are concerned, ATJJAA, 30% extra deduction for those new employees appointed for the next 3 years. So those 30% of salary would be given as extra deduction under ATJJAA, subject to various conditions and certifications to be uploaded. So that extra 30% of salary paid to new employees, that deduction is also eligible for those persons who are opting for new tax regime. So apart from these three deductions in form of employer's contribution to new pension scheme, this Agnivir fund contribution, and ATJJAA weighted deduction for salary payment, only three deductions are eligible for those persons who are going for new tax regime. No ATC deduction, no ATD deduction, no ATDD, DDB, no ATTTB, no TTA, only those three deductions, right from ATC to ATU in form of ATCCD2, ATCCH, and ATJJAA is only applicable if you are going for this new regime. So this is what about various deductions, various exemptions, various claims that you have to sacrifice if you want to opt for this new tax regime. All those things apart one or two are remaining unchanged for that previous year, assessment year 23-24. I was mentioning standard deduction was not there. Now this standard deduction has came in. Then that ATCCH was also not there till now. Now this ATCCH is also there. Apart from those small amendments, all those deductions, all those claims, all those exemptions which were not there for new regime for the assessment year 23-24 is still continuing for this assessment year 24-25 also. Then apart from these deductions and exemptions, next thing is without set off of any losses. You cannot set off any losses, carry forward or depreciation of any earlier assessment year if such loss or depreciation is attributable to any of those deductions as referred to in clause number 1. So in any of those deductions after claiming, any of those exemptions after claiming, you have got that loss which has been carried forward or any additional depreciation which has been carried forward. Those amounts of loss or depreciation cannot be set off against income if you are getting onto that new tax regime. So if you want to go for this default regime for the previous years, if you are having any carry forward losses or carry forward depreciation, and those carry forwardness of losses and depreciation was due to those reasons or those exemptions deductions which was mentioning in subclause number 1, that cannot be set off against current year income. First thing. Then under the head income from house property with any other head of income. So what does it mean? I was mentioning if you are having a self-occupied property, then 24B, 2,30,000 rupees, you cannot get that deduction. First thing. And if you are having let out house property, I was mentioning, if you are having let out house property, that interest definitely yes, you can deduct. Interest definitely yes, you can deduct from that house property income only. But if that interest deduction resulted in loss from house property, that loss from house property cannot be set off against any other head of income earlier, or if you are opting for this old regime, definitely yes, this house property loss can be set off against any other heads of income, including even income from salary. But if you want to go with this new tax regime, if you are having interest for this house property, maybe let out property, that let out property interest can be deducted against let out property income. But if that interest deduction results in loss from house property, that loss from house property cannot be set off against any other heads of income. Any other heads of income. Suppose if you are having house property, say gross annual value or net annual value be suppose 5 lakh rupees, standard deduction 30,000, you have deducted 3.5 lakh. And if you are having interest on home loan 4 lakh rupees, that 4 lakh rupees, if you deduct, it would result loss from house property 50,000. That 50,000 rupees you cannot set off against any other heads of income, even though it's a let out house property. Earlier itself in clause number 1 itself, I was mentioning, clause number 1 itself, I was mentioning that if you are having house property in form of self-occupied house property, not a let out property, not a deemed let out property, the self-occupied property. So if you are having that self-occupied property, then up to 2 lakh or 30,000 itself you cannot deduct. Why? Because in self-occupied property, there is only chance for loss from house property. So in short, loss from house property, may it be from self-occupied, may it be from your deemed let out or your let out property, that cannot be set off against any other heads of income. So many persons could be asking, what option I have to select for this assessment here. So there is no ready-made answers. There is no ready-made answers. Definitely, yes, there would be something after discussing rebate. I would be discussing those things. But for the time being, there are no ready-made answers. Person to person, year to year, it would change. Person to person, year to year, it would change. So on that basis, definitely, yes, you have to select whether it is old or new, which is beneficial to you. Say this year, new scheme was more beneficial to you, you go for new. Next year, if it is old, go for old. This swap would be applicable only for those persons who are not having income from business or profession. You are only a salaried class person, or you are having property income, you are having income from other super capital gain. If you are not having any income from business or profession, then definitely yes. Year by year, you can swap. New to old, old to new, new to old, definitely yes, you can swap with. So year to year, you have to take into consideration how much deduction you are having, how much claims you are having, exemptions you are having. On that basis, definitely yes, you have to decide which regime would be beneficial to you. Even if you see the newly notified income tax forms, Excel-based utilities has been issued, or it is downloadable right now from income tax website. In that Excel-based utility itself, you may see an option to compare new with that of old. So by clicking that button, you can compare which option would be beneficial to you, whether it would be old regime or it would be new one. So in that way, even the Excel-based utilities are helping you to select which type of option is beneficial to you. But only thing is, if you are having income from business and profession, I was mentioning, you cannot have that easy swapping options. But still, or if you are not having that income from business or income from profession, year to year, on the basis of those deductions, exemptions eligible for those particular years, you can do it. There are no ready-made answers as such. So this is what about this clause number 2 regarding set off of losses. Then, if you are having any depreciation in the versions of section number 32 2A of section number 1 determined at the time limit, that is additional depreciation also you cannot do it. Then without any exemption or deduction for allowance perquisite, whatever name called, provided under any other tax law for the any other law for the time being imposed other than this income tax laws also. So all these are those restrictions, all these are those conditions which are there for those persons who are going to opt for new tax regime. Now, the same slide, head by head, I have given the analysis. All those things that we were discussing till now, head by head, we would be discussing in the later session, slide. First one is regarding to this salaried persons. If you see, if you are a salaried employee, then definitely yes. I was mentioning there is a change. There is a change in rebate also. Rebate also, not only for the salaried persons, for all assessees. From this assessment year 24-25, the rebate under section 87A has been increased, but only for those new regime under section 115 BAC occurs. So what is the difference from assessment year 23-24 from this assessment year 24-25? If you see, till assessment year 23-24, may it be an old regime after or new regime after, the rebate was up to 12,500. Because both under old as well as new, the basic slab rate was 0 to 2.5 nil, 2.5 to 5%. After 5 lakh only, there were changes in slab rates. But now, right from this assessment year 24-25, I was mentioning, for this old regime 0 to 2.5 it is nil, 2.5 to 5 it is 5%. And for those who are going for old regime, the rebate under 87A would be again 12,500 only. 12,500 only. There is no change. There is no change as far as old tax regime is concerned with regarding to this 87A. But there is a change in slab rate for this old, this new regime holders, 0 to 3 nil, 3 to 6 5%, 6 to 9 10%. In that condition, there is an increase in rebate also, in such a way that the total rebate from 12,500 has been increased to 25,000 rupees. 12,500 has been doubled to 25,000 rupees. I was mentioning the government, the finance ministry is trying to popularize this new tax regime to more taxpayers in order to increase the taxpayers' base from old regime to new tax regime. They are giving more privilege, more exemptions, more tax benefits to those new tax regime opters also, for which I was mentioning they have given standard deduction, which was not eligible till now. From this assessment year, 50,000 you can get. Plus, you would be eligible to get extra deduction 25,000 rupees. Meaning what? If you are having income up to 7 lakh, then your total tax would be nil, for the reason you are getting that rebate of 25,000 rupees. You are getting that rebate of 25,000 rupees. So what it is? How this 25,000? You know, if you are having an income 7 lakh rupees, if you are going for this new tax regime, slab, how does it stand? 0 to 3 nil, 3 to 6 3 lakh rupees, 5%, 15,000 rupees, 6 to 7 lakh, 1 lakh, 1 lakh 10%, 10,000. So this 10,000 plus 15,000, the total tax would be 25,000. The total tax would be 25,000 for those who are going for this new regime. So if your income is up to 7 lakh, then you would be getting that rebate of 25,000 maximum. Thereby, your total tax payable would be 0. So 25,000 or actual tax payable, whichever is lower, shall be the rebate. So maximum rebate 25,000 would make the assessee, if you go for new regime, then up to 7 lakh income if you are having, you need not pay a single rupee as tax. First thing. Then one step ahead, if you think, you may see, if you are a salaried employee, definitely yes, you are going to get that 50,000 standard deduction also. So if you are a salaried employee assessee, if you are having salary up to 7.5 lakh, 7.5 lakh is your total taxable salary. 7.5 lakh less 50,000 standard deduction. 7 lakh would be your total income. For the reason your total income is 7 lakh, this rebate 25,000 would make your tax again nil. So those salaried employees who are having taxable income up to 2.5 lakh, that I was mentioning. If any salaried employee asks you which option is better, If their total annual salary is less than 7.5 lakh, definitely yes, there is no doubt. We may advise them to go for what? New regime. Why? Because up to 7.5 lakh, there are no tax at all. There are no tax at all. It's the first thing. Then for this assessment year up to 23-24, you may see if your income is up to 5 lakhs, then you can get that rebate 12,500. But if your income becomes a bit more than 5 lakhs, say 5 lakh 10 rupees, 5,00010 being your income, taxable income, 5 lakh 10 rupees being your income, or 5 lakh 100 rupees being your income. So a meager or a small change over and above 5 lakh income you are earning, then you would be losing the entire 12,500 rebate opportunity. That 12,500 plus 100 rupees tax at 20% you would be required to pay along with this. So that was there. Suppose two friends are there, Mr. A and Mr. B. Mr. A's income 5 lakh 100 rupees and Mr. B's income 5 lakh rupees. Mr. B tax nil, but for Mr. A it would be 13,000 rupees to be paid in form of tax along with this. So due to that incremental 100 rupees, 13,000 extra he would be liable to pay. So there was some illogicness or some unreasonableness as far as these rebates were concerned. Maybe taking into consideration this point to make it more popularized, from this assessment year 24-25, my dear learned participant, another major leap, another major amendment thing that has happened is, from this assessment year 24-25, again, only for those persons who are opting for new tax regimes. Only for those persons who are opting for new tax regimes. If their income is more than 7 lakh. So what is 7 lakh? I was mentioning up to 7 lakh rupees, there would not be any tax due to that 25,000 rupees tax relief. Suppose in this year, again two friends, A and B, A's income 7 lakh, supposing both are non-salaried, A's income 7 lakh, B's income 7 lakh 100 rupees. So here also, if without this concept of marginal relief, B would have been zero tax to the person. A again would have to pay 25,000 plus 100 rupees tax plus as extra. But from this assessment here, taking into consideration this unreasonableness, the department had done, or the finance ministry have done, an marginal relief concept which was applicable for those persons who were earning super income, 50 lakh and above surcharge, 1 crore and above surcharge, 2 crore and above surcharge, 5 crore and above surcharge. So there is a concept, namely marginal relief. Incremental income or incremental tax would be compared. Incremental tax should not be more than incremental income due to that implementation of surcharge. Marginal relief concept was there. Same marginal relief concept has been implemented to this new regime tax holders also, wherein opters also, wherein if you are having income a bit more than that of 7 lakh, which is the basic limit, non-taxable limit, if I say, for this assessment year, or from this assessment year 24-25, say 7 lakh 100 rupees, you need not pay tax 25,000 rebate plus 100 rupees tax. No. Plus this, no. Only the incremental income you would be required to pay. 100 rupees would be the tax. 100 rupees would be the tax. It is not 100 rupees tax, no. 100 rupees, meaning tax on 7 lakh 100, tax on 7 lakh. That incremental tax would be compared with that incremental income rupees 100. So definitely yes, in this case, say 26,000 rupees would be tax plus what do you call it? Yes, 25,000, 50 rupees maybe the tax plus, or 25,600 or maybe tax plus cess maybe. But here, if you are comparing that extra tax with that of that extra income of 100, that 100 rupee being the lower portion, only the tax would be that limited to 100 by applying the same marginal relief concept which is applicable for 50 lakh and more, 1 crore and more, 2 crore and more, 5 crore and more. The same concept is being made applicable here. So if you are having income of 25,100, they would not be required to pay 26,000 rupees. Instead, they would be required to pay only 100 rupees as tax. 100 rupees as tax. Say 7 lakh, 1,000 rupees being the taxable income, 7 lakh 1,000 rupees, tax would be only 1,000. 7 lakh 2,000, only 2,000. 7 lakh 5,000, only 5,000. So in that way, there would be one indifference point. Indifference point wherein incremental tax would be more than, or incremental income would be more than incremental tax. From that moment only, you would be required to pay the normal tax slabs. Otherwise, if your incremental income is lesser than that of that incremental tax, you will have to pay the tax in form of extra income over and above 7 lakh only. Hope I am clear. So this is that basic advantage which has been given, one among those privileges that has been given for those new tax regime holders right from this assessment year 24-25. But this option is not applicable. This option is not applicable for those persons who are going for, those option is not applicable for those who are going for old regime. From this assessment year also, if you are having 5 lakh 10 rupees, then 12,500 would not be there. 12,500 plus 10 rupees tax plus cess would be applicable to you. This marginal relief option is only applicable to those new tax regime holders only, new tax regime holders only. So this is about this rebate 25,000. So somebody had mentioned in that chat box that PPT is not moving. Nothing in this PPT, sir. This slide only I am discussing. So 3 points I have discussed with regarding to this rebate. First thing, extended rebate, then extended slab limit, as well as this 7,50,000 extra deduction, fully exempted income for salaried person. Then this marginal relief concept also. All those things are being shaded in blue. That's it. So this is what with regarding to rebate under section 87A. Hope this concept marginal relief is clear to you. If any doubts, definitely yes, you may text in that we can discuss later at the end of the session. Definitely yes. So this is what about that new privilege that has been given to those new tax regime holders right from this assessment year 24-25. Then I was mentioning from income from salary perspective, the deductions, exemptions, if you see, I was mentioning standard deduction, entertainment allowance deduction, professional tax deduction are eligible for old regime holders. But here for new regime holders, only standard deduction, that too, right from this assessment year 24-25, till now it was not applicable for them. From this assessment year, only this deduction, standard deduction is there. Even professional tax paid is not at all available. Apart from the standard deduction, for those persons who are getting family pension, if you are getting, then you would be getting that 1/3 of pension or 15,000, whichever is lower, to be as deduction for family pension earners also. So that was there for only old, but right from this year, both for old, irrespective of your regime selection, that 15,000 or 1/3, whichever is lower, for family pension earners, you can get. Then I was mentioning various deductions, exemptions, leave travel allowance, house rent allowance, exemption 1014(1), 1014(2), all retirement benefit, standard deduction, professional tax, then that entertainment allowance plus relief under section 89. All those exemptions, all those deductions, all those claims you can have if you are going for old tax regime. Now, if you closely watch, if you are a salaried person, if you are having salaried income, then what are all the eligible deductions? So these things which are in the slide are eligible. Definitely yes. All the others are ineligible. You have to proceed. So what are all eligible deduction? Standard deduction already we have. Anyhow, again, standard deduction. If you are a salaried employee, you are eligible to get, even though you are going for new one. First thing. Then transport allowance. If you are a new tax regime holder or older one, transport allowance for specially able persons, meaning deaf Some orthopedically mentally handicapped person, 3,200 per month. Exemption is there. That exemption is eligible for new tax regime persons also. So that transport allowance for specially allowed, specially abled person, specially allowed is in typo error, specially able, deaf, dumb, orthopedically, mentally disabled person, transport allowance 3,200 per month is eligible as deduction. Then in that 1014(1) category, I was mentioning various deductions on the basis of actual expenditure for that purpose. Conveyance allowance, traveling allowance, daily allowance. So these three types of allowances are eligible for new tax regime of TILs also. So in 1014(1) category, the remaining in form of uniform allowance, research allowance, etc. are not eligible. But conveyance allowance, traveling allowance, daily allowance are eligible, are not eligible, are eligible. Apart from these three allowances, 1014(1), no other allowances are eligible. Then with regarding to fully exempted allowances, allowances to judge, etc. were there, functional allowance, etc. were there. In that category, allowance paid outside India for government employees. Allowance paid outside India for government employees are eligible for those persons who are going for this new tax regime. So allowances paid outside India for government employees are an eligible deduction. Eligible deduction. Then people may ask, there are various other deductions. Various retirement benefits deduction. Retirement benefits deduction in form of various voluntary retirement scheme deduction exemptions are there. Commuted pension exemptions are there. Gratuity, leave encashment, retrenchment compensation, provident fund related. Various retirement benefits are there. So for those persons who are having those retirement benefits, if you are opting for this new tax regime, all those deductions, all those exemptions would be eligible. May it be commuted pension, may it be gratuity related, may it be leave encashment related, retrenchment compensation, voluntary retirement scheme, irrespective of whether you are opting for new or old. Or in other words, even though you are going for new option, you are a government employee at the time of retirement, you are receiving gratuity, fully exempt. You are getting leave encashment, exempt. So those exemption provisions, 10, 1010, 1010AA, 1010C, etc., those deductions, retirement benefits would be applicable, would be eligible for new tax regime of TILs also. In other words, retirement benefits, both tax regime of TILs would be allowed to get deduction. Then if you see again, income from house property I was mentioning. Anyhow, for a better clarity, two types of category. First category self-occupied. Second category let out and deemed let out. So for self-occupied property, for old regime, if you are going for self-occupied property, 2 lakh rupees for 30,000 for those conditions. For renovation loan, 30,000 only. If you are not having proper documents, 30,000 only. Loan on or before 1/4/1999. This 30,000 only. If house cannot be completed within 5 years from the date of granting of loan, 30,000 only. Apart from those conditions, then your deduction would be up to 2 lakh rupees. 2 lakh rupees. So here, what happens? Here, if you are having that old regime to be continued to be opted in, definitely yes, you will be getting that 2 lakh rupees maximum to be a deduction. Then we know, apart from this home loan deduction, 80EE for that assessment year 16-17 who had taken loan with those conditions 35 lakh and below, then for those conditions, if it is satisfied, 80EE, they would be eligible to get 50,000 extra if you are paying interest more than 2 lakh rupees. So that deduction 80EE is also not there for new regime holders. Then up to this assessment year, financial year 22-23, if you have availed right from 2019 till 2023, if you have availed a new home loan, up to 35 lakh loan, 50 lakh, so 45 lakh total value of property, then over and above 2 lakh, you would be eligible to get 1,50,000 extra. 1,50,000 extra over and above 2 lakh under section 80EEA. So that section is also not eligible for those persons who are going for new regime. Why? Because from ATC to ATU, I was mentioning only 3 sections were eligible. So thereby, interest on home loan, self-occupied, first one 24B, not eligible. ETEE, extra 50,000 not eligible. EEA is also not eligible if you are going for this new tax regime. So comprehensively, consolidately, I am talking about interest from home loan. 3 deductions, 3 sets of deductions are there for self-occupied property under 24B, under ETEE, ETEEA. All the 3 are not eligible for new tax regime of this if it is a self-occupied property. Then the principal part, repayment part, ATC, we know up to 1,50,000, ATCCC ACCE limit, you can have the deduction if you are going for this old tax regime, but that amount is not there if you are going for new tax one. Then for those let out and deemed let out property, there is no restriction for that 2 lakh rupees. Any amount of interest amount, definitely yes, you can deduct. And under old regime, due to that interest, if there are loss from host property, that loss can be set off against any other head of income, maximum up to 2 lakh rupees. Maximum up to 2 lakh rupees, you can deduct from any other heads of income. That is there for old regime offers only. Old regime offers only. So in short, self-occupied property up to 2 lakh you can deduct. For deemed let out and let out property, without limit you can deduct for intra-head set-offs, but for inter-head set-offs, definitely yes, you would be required to limit that deduction to 2 lakh rupees for this self-occupied or this let out property. So this is what about old tax regime. So all those privileges are not there for new tax regime. First thing, self-occupied house property interest you cannot at all deduct. Then this principal amount 1,50,000 you cannot deduct. Then from this let out house property, definitely yes, you can deduct that interest up to income from that let out house property or income from that deemed let out property. It cannot be a loss. If it is loss, that amount cannot be set off against any other heads of income. So that is the fundamental distinction between old and new tax regime as far as this source, house property source, is concerned. Now, then I was mentioning, apart from this income from salary, standard deduction, various allowances, various retirement benefits, 89 relief. Yes. One point I actually didn't discuss is was about this section 89 in salary. In section salary, we know if some salary persons are having some arrears of salary, advance of salary and all. In such situations, 10E has to be filed to get that 89 relief. So there are questions around whether this new regime holders can get that 89 relief if they are having those tax arrears, salary arrears. Definitely yes, 89 relief is applicable for new regime holders also, along with old tax regime holders. Now, so that salary already we have discussed, house property we have discussed. Now it's regarding to various deductions under chapter 6A. So I was mentioning all those exemptions deductions, ATC to ATU, all those deductions subject to conditions are eligible for those old regime persons. 10AA, SEZ related, special economic zone related deductions are also there. For tax holiday periods are there up to 5 years, up to 10 years, 10 years and above, 100%, 50% and all. Tax holidays are there for export turnover portion. So that would remain, or that would be only for old tax regime persons. The 10AA would not be for those new tax regime opters. Plus those deductions I was mentioning, ATC to ATU, only 3. Only 3 would be eligible. ATCCD 2, ATJJA, ATCCH. ATCCH, a benevolent fund. ATJJA, new employees, weighted deduction 30% extra over and above salary I was mentioning. 80CCD2 employer's contribution towards NPS. So these three deductions are only eligible if you are going for this new option, new regime. HEC various deductions, LIC premium, provident fund, NSC certificate, municipal repayment of home loan, then various investments in mutual funds, various equity-oriented funds, senior citizen savings deposits, Suvinya Samruddhi fund. All those deductions are there in ETC. Then ETC CD1 over and above 1,50,000 ETC CE. You can get that ETC CD1B 50,000 extra within 1.5 lakh ETC CD1, ETC CD1B employees contribution to NPS extra 50,000. So totally 2 lakh you would have. That is there for old regime persons. ETD medical premium. We know 25,000 for non-senior citizen KUPA. Self-spouse children first one. Parents second one. So 25,000 plus 25,000, 50,000 minimum. 50,000 plus 50,000, 1 lakh maximum you can get. So in that 50,000 rupees, you can have medical expenses also if you are not have been in medical insurance covered. Medical expenses also 50,000 rupees you can claim. So that option ATD, ATE for education loan for 7 years without any limit interest portion you can get the reduction. ATG definitely yes for those 100% with limit, without limit, 50% with limit, without limit to various government funds, to various charitable institutions, etc. You can get those reductions. ATG, ATTTA, ATTTB, interest reductions, QQB, RRB, royalty, patents, etc. 3 lakh. ATU, personal disability, 75,000 or 1,25,000 you can deduct. All those deductions are there. Apart from this, some other more are there. ATC to ATU. All those deductions are eligible for old tax regime persons, wherein for new tax regime persons, all these deductions, including income-based deductions, ATA, IA, AIA, etc., income-based various deductions are there. All the deductions are also not eligible for this new tax regime of test. Only those three deductions. Again, do I repeat for the sake of clarity? ATC CD2, AT JJAA, and the Agniveer fund. Only these three CCH. Only these three sections are being eligible for those new regime holders if you are going for this default regime for 1/20 year, 24/25 also. Then I was mentioning how to give advices to the assessees or how to plan ourselves regarding whether to go for this new regime or for this old regime. If you see, I was mentioning, what questions are there in the inbox? Definitely, yes, I would be on to those questions after the session. Yes. So for the time being, I was mentioning, there are no ready-made answers. But I was mentioning if your total salaried income, if you're a salaried employee, your income is less than 7.5 lakh, definitely yes, you may advise that new regime is better. Or even I was mentioning, say, 7,60,000 also. 7,60,000 also. Again, new regime would be beneficial. Why? How? Because I was mentioning, if you are having salaried income 7.6 lakh, you would be eligible to get standard deduction 50,000, and your total income taxable would be 7,10,000. So after that rebate, only 10,000 rupees is the incremental one. So yes, the tax only would be 10,000 rupees. So you can save the tax. In that way, somewhere around 7,50,000, 60, 65 and all, new regime, without any doubt. I told you definitely yes, you can advise that new regime would be beneficial. But any other situations, if the assessee, if that taxpayer is having some more deductions, some more exemptions, case to case, definitely yes, you have to calculate and have to calculate the tax and have to advise which tax regime is better. For that also I was mentioning, presuming the assessee is not having profits under business or a profession, definitely yes. Year by year, he can swap. Year by year, you can swap. We don't know when this old regime itself could be scrapped. I don't know. There are various professional discussions wherein lots of unethical practices are being carried by the assessees in order to give those bogus deductions. Many of my income tax officer friends are suggesting me maybe within some years all these deductions, all this old regime concept would be over. We cannot predict. But anyhow, for the time being, the new tax regime is there. So for those persons, which one becomes beneficial, year by year, year after year, you can swap. Till now, till then, you are having income from business and profession. So here, when he comes in, anticipatory, say for example, if the TDS is being deducted by the respective employer, and they have deducted TDS on the basis of say new regime they have. Now what it becomes? At the time of filing, at the time when they appeared before the tax professional advised that old regime is benefit to you. So now at the time of filing return, whether you can opt for old regime, definitely yes. It's quite indifferent under what regime the employer deducted the tax. That tax credit definitely yes we can take. But if you see if they have deducted on old regime, now you feel new regime is better. Definitely yes, at the time of submitting the return, you can go for new. Or in other way, you had given new regime there, or the employer have deducted the TDS entire year on the basis of old new regime tax slab rates without any deductions exemptions. Now, at the time of filing, on the basis of all those deductions exemptions during the year, you come to find that old regime is beneficial to you. Deductions exemptions is beneficial to you. Definitely yes, you can go for that old regime at the time of submission of return. But once for an assessment year, if you had gone for new, you cannot revise the return by going for old, or in vice versa. So for a single year, you cannot swap. But 1 year to another year, definitely yes, on the basis of benefits that you are enjoying, definitely yes, you can swap with them. You can swap within old with that of new, or new with that of old, provided you are not having income from business or profession. Regarding business and profession, definitely yes, I was mentioning for that those restrictions under 115 BAC subsection number 6 is there. So that restrictions I was mentioning, once you are into old, then one time you can opt out. Then again, you cannot go back to old until and unless you are not having any income under PGBP. So for that, persons who are having PGBP only, restrictions are there. Apart from which, there are no restrictions. So it would be better to check year after year which one would be beneficial. But normally, if you see those persons who are earning higher income, definitely yes, they are having better advantage on for this new tax regime only. If you see, on a general sense only, I am telling. But if they are having heavy deductions, higher exemptions, if they are having, definitely yes, old regime would be beneficial for them also. Now, earlier there was a trend in order to save taxes only, people would maybe subscribing various tax saver deposits, various life insurance plans. They may be constructing home in order to get those tax advantages. Now they have to rethink. Whether only for the sake of getting tax regime, whether I have to, because without this reduction also I am getting a lower base income tax slab rate, so which would be beneficial to you. Definitely yes. you may definitely yes. You may decide whether to go for those new home loans, whether to subscribe those LIC policies, whether to go for those term deposits, fixed deposits, tax saver deposits, etc. Definitely yes. So in short, ITR 3, ITR 4. First and foremost thing, if you are a business person, you are filing ITR 4, you are filing ITR 3. If you want to claim your house property loan interest, if you want to get ETC deduction, ETD deduction, ETDD deduction, first point itself I was mentioning, you have to file the return, you have to file that form in 10IEA on or before 139 one time limit. So without which, if you are a late filer, you are a habitual late filer, then from this assessment year 24-25, if you are a non-tax audit assessee, if you approach your tax consultant after 31st of July, you cannot get those deductions, exemptions under those things that we were mentioning earlier. You would be forced enough. You would be forced enough to go for that new regime, even though you are having eligible deduction, even though old regime is beneficial to you. This year you cannot go for what? Old regime. Next year you can, provided again you have to file that 10IEA on or before 139 one time. So beware, definitely yes, we have to advise. We have to advise. We ourselves as tax professionals, or we ourselves as tax advisors, or for ourselves, we have to make our clients, make our peer group aware with regarding to this point. If they want to go out from this new option, default option, to that old regime, if they are having business and professional income, if they are not having business and professional income, no issues. But if they are having business and professional income, definitely yes, they would be required to file that 10IEA. So the same I was mentioning in this thing also. Salaried employee, definitely yes, they can opt in this year, that year, definitely yes, they can swap with. But business and professional income, certain restrictions are there. That is much easy, they cannot do this swapping right from this old to new and new to old. If you are not having business and professional income, year to year, definitely yes, you may. Then if you are having business income, whether there are any changes in computation of business income under section 28, those deductions from 30 to 38, those inadmissibilities, those presumptive taxation in 44 AD 8% 6%, 44 ADA 50%, 44 AE 7,500 or heavy vehicle per 10,000 rupees, whether there are any changes. Apart from those extra deductions, additional depreciation I was mentioning, apart from those investment allowances I was mentioning, apart from those scientific research related or 35 AD specified business deductions are concerned, apart from those deductions and allowances, all the other provisions would be similarly applicable for those new regime holders as well as old regime holders also. So there would not be any change. Changes could be with regarding to these deductions. 32(1A) to A with regarding to additional depreciation. Then 32 AD with regarding to that investment allowance in new plant and machinery in notified backward area. 33 AB with regarding to tea development, coffee development, rubber development account. 33 ABA with regarding to site restoration fund for those mining, oil miners, etc. Then expenditure on scientific research, 100% of value of building, machinery, etc. in the same year, including actual expenditure and revenue expenditure that would not be for new regime holders. 35 AD, specified business, 100% of capital expenditure in the year of expenditure itself. Then 35 CCC, rural development allowance. So all those deductions are eligible only for old regime office, and these are not applicable for this new regime ones. So these are the differences, fundamental difference in computing that PGBP. So I was mentioning 4 heads in the sense 4 categories. Salary separate I was mentioning. Income from house property I was mentioning. Then that ATC to ETU I was mentioning. Then regarding this PGBP also I was mentioning. So this many changes are there. So for this business as well as those income from for those deductions, for companies, for cooperative societies, all those assessees also, these deductions, these exemptions are not applicable. So this is not only confined with salary, house property, definitely yes, is confined with individual HUF, etc. But for those business related, for those chapter 6A to ETC to ETU, 6A deduction are not only confined to individual HUF, AOP, BOA, not. It is applicable to companies also. Is applicability of operating societies also. So that also definitely yes. You have to keep it in mind, my dear professional friends. So these are the deductions in the head, profits and gains from business and profession. They are not eligible for new tax regime holders. I was mentioning all these things are applicable for them also. Then I was mentioning about retirement benefits also, gratuity, superannuation, leave encashment and all. All these retirement benefits are applicable for new tax regime offers also I was mentioning. Then there may be some thoughts thinking why the government is this much promoting this new tax regime instead of old one. Definitely yes. So the basic fundamental reason I was mentioning that the government nowadays getting lot of bogus claims. Despite issuing various notices, they are not complying with the actual procedure. For high refund claimers, the government is the department, income tax officers are sending the notices or even directly the portal are sending the notices in order to re-verify or reassure whether all the claims are genuine. For that also they are sticking on with those claim deductions. So there are various lobbies, various mafias I would use to call, who are having those surplus practices, unethical practices in order to get those bogus deductions. So in government offices and all, police departments, military departments, definitely yes, they are going to hurt the most. Why? Because if they have claimed those bogus this thing, and once those bogus claims are being proved, then definitely yes, vigilance sort of, their departmental sort of procedures, disciplinary proceedings also may be initiated. So definitely yes, we have to advise our clients not to go for those bogus, inflated deductions, exemption claims. The department is having those checks, those various methodologies, various risk-based parameters to verify these claims. They are doing it. Even salaried persons are getting those returns to be scrutinized for the last 10 years. 10 years returns are being scrutinized. In our town and all, lot of assessees who have claimed all these deductions, who have regularly got those refunds are being called for. Why? Because now all those deductions, all those claims you can present before the employer, or after considering all those deductions, exemptions, employer would be deducting the tax. Maybe due to some technical issues, you may have not got that option to give those certifications in front of employer, or maybe some other deductions wherein the employer cannot give the deduction ATG and all. Those deductions definitely is acceptable. Apart from which, without the employer giving the deductions, if you are getting those deductions by submitting the returns, the department would smell something fishy. And nowadays, definitely yes, they are sending the notices. Again, the advice after receiving the notices, kindly don't advise again to stick on with those claims. Ask them to file updated returns. Let them pay 25% extra. Let them pay 150% extra, 140B extra tax. Why? Because if the department catches and department by scrutiny does it, not only for this year, but for those last 10 years, they would be doing that exercise. Plus 270A, 200% of tax divided can be the penalty. Plus for those departmental officers, this is government officials, maybe whatever position they are, the departmental disciplinary actions also may be initiated. In order to avoid all these harsh things, avoid claiming those deductions, avoid claiming those extra these things, kindly do have an ethical practice of filing the return. And if you had not done it for the past period, due to some mistake and these things, now itself you advise them to file with what 139(8)A either voluntarily or after receiving such notices. Yes. So why is old regime being not appreciated and new regime being given this thing? To ease of compliance, to simplify the tax administrative convenience, to mitigate litigation. So definitely yes, government would be pushing this new regime only. Now, after this tax rate, after these changes in slab rates, after these changes in rebates and all I was mentioning, now let us move on to another small amendment as far as surcharges are concerned. So that small marginal relief concept doubled the rebate, 25,000. Instead of 2.5 lakh, 3 lakh the limit. All these things would be helping small and marginal earners or medium or middle, lower middle income based groups. For those super rich persons who are having income more than 2 crore. If you see now, the surcharge for individuals and all, up to 50 lakh, there are no surcharges. 50 lakh to 1 crore, 10% surcharge is there. 1 crore to 2 crore, 12% is there. 2 crore to 5 crore, 15% is there, and over and above 35% is the 25% is there, and after 5 crore, 37% is the surcharge. So those persons who are having that higher income over and above 5 crore, now they are required to pay surcharge at the rate of 37%. But now that 37% still is there for those persons who are going for old. There are no changes for old regime opters. But if you file the return by opting new tax regime, instead of 37%, the maximum surcharge has been fixed at 25%. So higher income, super rich categories also is being benefited with this amendment. So if you are having super rich income also, you may compare. Due to this reduction in surcharge, you may be having tax advantages in new regime. 25% tax rate. Surcharge is the highest tax rate if you are going for new regime. Then 87A rebate, I was mentioning, if you are having that old regime, the maximum rebate which would be eligible would be 12,500 only. But if you want to go for this new regime, definitely yes, you are going to get that 25,000. Apart from this 25,000, whether only that 7,50,000 salaried persons are benefited, whether only those 7 lakh persons are benefited? No. Definitely yes, those persons who are having income a bit more than 7 lakh. 50% is also going to get benefited with this marginal relief. So that extended rebate, extended relief is also been there for new persons, new tax regime opters. Then another advantage. If you are going for this 115 BAC, definitely yes. This AMT meaning alternate minimum tax. AMT taxation is not applicable if you are going for new regime. AMT, we know provisions wherein if your income other than companies, for companies, MAT, minimum alternate tax is applicable. Other than companies, AMT is applicable. Other than for firm, and not for individuals issues at all. If only their income is more than 20 lakh before those reductions, then only this would be applicable. 18.5% of the adjusted total income, or 18.5 or actual tax payable whichever is higher, they would be required to pay. Then that excess AMT credit can be carried forward to 15 years. So even though you are getting those exemption reductions, the government would be again asking you to pay extra tax other than the normal tax payable in form of AMT. 18.5% of adjusted total income you would be required to pay if you are claiming more deductions and exemptions. But for those persons who are going for this new tax regime, if you are opting for, then this provision, AMT, alternate minimum tax option is not applicable. So this alternate minimum tax option, 18.5% of adjusted total income or actual tax which is payable, that option or that provision, that procedure is not there if you are going for this new regime under section 115 BAC. So this many privileges are there for those assessees, may it be an individual assessee, HEF, AOP, BOI, artificial juridical person under 115 BAC. The 115 BA and AB I was mentioning for corporate companies. BAD I was mentioning for cooperative societies. Unfortunately, for firm, limited liability partnership and local authority, these two options are not there. For opting these options, I was mentioning this many conditions are there. 115 DAC 2, various exemptions, various deductions you have to sacrifice. But lot of benefits, lot of privileges are there for opting for this new regime also. So both things you have to compare, and finally we have to decide, or you have to advise which option to be selected. And this being the first year for this radical reshift, definitely yes. Due care has to be taken for selection or non-option for this new default regime or to opting for old regime. Person to person, without business and professional, I was mentioning, you can very well swap. But for those business and profession, definitely yes, diligently we have to do that exercise. So this is what about this applicability of new tax regime for various categories of assessee. More focus was being made towards individual assessees, but all the provisions which were applicable for the remaining things also were being mentioned in between. So now almost 15 more only minutes left. So as I mentioned earlier, definitely yes, we would be addressing those questions which are being mentioned in those text box, question and answer box questions. So for which actually I'm trying to go to that chat box. The first among the lot, some anonymous. I'm a salaried person with only intraday income in shares, PGBP speculative. Am I given once in lifetime option to opt into new regime and cannot opt out from its right? Sir, in the sense, if you are having that PGBP income, definitely yes. May it be an active income or maybe that is speculative income. If you are having business income, definitely yes, that conditions in subsection number 5 and 6 would be applicable to you. So that options could not be applicable till you are not having that income from that speculation. Next question from B. Kumar, FCMA, Chennai. Sir, whether there is any change in the treatment of family pension income, which was treated as income from other sources. Sir, I was mentioning from this family pension till assessment year 23-24, that deduction 15,000 or 1/3 of family pension, whichever is lower, you can deduct only for old regime. Old regime option only you can adopt. But now, after this amendment in assessment year 24-25, for family pension income, if you are having income from other source, you can get deduction both for old as well as new also. So both for old and new, you can get that 15,000 rupees or 1/3, whichever is lower, you can get it. That's what about B. Kumar sir's question. Now on to CMA Karthik Gavani sir's question. Sir, explain why old regime taxpayers not getting marginal relief benefit. Sir, that question literally I cannot explain because it's the governmental decision or the governmental policy that they are giving that extra privilege only for new tax regime of this. So maybe due to the obvious reason, the government want to make the tax payers more genuine, more reasonable, without getting all those deductions, without getting all those exemptions, maybe to promote the new regime, not to go for old regime. Maybe for that reason, the government have not given that marginal relief for called to this old regime persons. It's my personal opinion. So definitely yes, we as a professional fraternity may definitely approach the department, budget suggestions and all we can send. We can have a suggestion, but for the time being, the government is not allowing them to get that marginal relief for old taxpayers, old regime of course, rather. Then one question from Farooq Guri sir. Which pension are to be taken under income from other source? Superannuation, EPFO, personal policies. So those LIC sort of a thing and all, if you are having, if there is no employer-employee benefit, definitely yes, it is income from other source only. But if it is an pension from your employer-employee, superannuation and all, definitely yes, it is income from salary. In that case, that 50,000 standard deduction is there. But for those provident fund pensions and all, it is not an employer-employee this thing, or LIC pension and all, it is not an employer-employee this thing. Then it would be taxed under income from other sources. In that case, no deductions would be eligible. It is only family pension. Family pension meaning after death of an employee, their spouses or their family members would be receiving. Parents may be receiving such family pension. For that family pension only, this 15,000 or 1/3 of pension, whichever is lower, would be applicable. That is your next question also. What is family pension? Family pension meaning pension received by family members after the death or such event of the salaried employee. If their family members, spouses or parents are receiving the income, then only this would be applicable. And this is not applicable for the superannuation, UPFO, personal policies. It is not applicable. Please explain how to use compare button in new ITR form. Sir, I was mentioning in Excel basic utility, if you download, there is an option to compare. So that this thing. Then in income tax web portal also, income tax calculator option is there. So in that income tax calculator option, there is two options, 115 BAC and old. Both options are there. So after entering all those particulars, after entering your gross income under the various heads, various exempted incomes, various deductions, exemptions, all those things you can enter. After which a calculator option is there in income tax www.incometax.gov.in. That portal is there. In that web portal, definitely yes, there is an income tax calculator. There you can select the income tax return also. In Excel based utility I was mentioning, there is an option to compare which option is better to you, whether it is old or new. Excel based utility I was mentioning. Then another question from Anonymous again. Deduction under section 80 CCD2 with respect to NPS 50,000 is available for new regime. So 80 CCD2 is not for that 50,000 extra. That 80 CCD2 is for employer's contribution to NPS. So if that NPS employer's contribution is being there under the head salary, it would be taxed under the head salary first. Then you would be getting the deduction under chapter 6A. So that 80 CCD2 is not considered with that extra 50,000. Rather, employer's contribution towards NPS is being listed in 80 CCD2. That 80 CCD2 would be applicable both for old as well as new. Whereas that extra 50,000, so 50 lakh is 50,000 I do think, that extra 50,000 rupees is with regarding to that 80 CCD 1B. For that 80 CCD 1B, only old can get. New regime opters, definitely yes, they cannot get that. 80 CCD 1B. Only three deductions. 80 CCD 2, 80 CCH in Agniveer, that 80 JJ, AA, that new employment opportunity, 30% extra. Apart from which, no other deductions from the chapter 6A are there for new regime opters. Then Ramaswarup Yadav sir, one question. So retirement benefits like gratuity, earned leave, encashment, retirement benefit, whether it is admissible? Yes, your answer itself. In the next slide, I was mentioning for retirement benefits, there is no distinction. It's quite indifferent. It's quite indifferent whether it is there for new or old. Both for old and new, it is applicable. Part 4, employer contribution. That I had already mentioned, sir. Employer contribution to NPS, 80 CCD2. That deduction, that exemption, it is there. Definitely yes. You can get those deductions from that section in chapter 6A. So the deductions are available. That is eligible. 80 CCD2 is eligible for that employer's contribution to NPS out of those three deductions. So these many questions were there in the chat box. 5 more minutes left. If any questions there, definitely yes, you may ask. In the meantime, I was mentioning, definitely yes. Now there may be some forms or some attachments wherein, just as if in case of paper return situations 15-20 years back, when we were filing those returns physically, we would be required to furnish home loan certificate. We would be required to furnish life insurance certificate. We would be required to give home loan statements from banks. All those eras were there before introduction of online return. At the time of online return, all the deductions, all the exemptions, the government had given the assessee for granted. The government, the department, income tax department believed the assessees. Self-claim would be enough. But later only, the department got an impression whether the assessees are misutilizing those freedom given to them, those privileges given to them. Now, for that sake, maybe slowly they are trying to shift from that mindset to some others, wherein those persons who had opted for old, who had given high-pitched deduction with high refund, they are being sending various notices. They are having that 2021 e-verification scheme. Without any shoppers notices, they are taking that return to be for 148. Then after giving that 148B, 148 capital letter A, B notices for showing the cost, why not? 148 proceeding can be done. 148 proceedings can be taken up to 10 years, if the total tax evasion is more than 50 lakh in total. All those procedures we are forcing, or those assessees who are unethically doing, maybe 90-95% or maybe even 99% of assessees may be properly filing the returns, but that remaining 1 or 2% persons who are getting that practice of doing unethic are making the life of other persons also miserable. Anyhow, maybe this new tax regime, maybe the order in the future, so we have to plan accordingly. For the tax sake only, we need not invest in those home loan, invest in those fixed deposits, invest in those LICs and all. And definitely, yes, sooner or later, we may see this new tax regime only. But for the time being, definitely, yes, even though at the time of inception of this section, the Finance Minister, Madam Speaker, Madam Honorable Finance Minister was mentioning, in order to avoid the services of so-called tax professionals, cost accountants, chartered accountants only, in order to file the return on self basis, in order to ease the compliance for filing the return, I am introducing a new section 115 BAC. Was the introduction before inserting this section 115 BAC. But for the last 3 or 4 years, definitely yes, we may have seen this introduction of new scheme have given lot of chaos, lot of confusion, old, new or old, which one beneficiary. So lot of confusions. Confusions before introduction, there were no that much confusion, whether that is eligible, whether this is eligible, whether that is exempted. Those basic questions were there. But now a lot of questions with regarding to this, that, and all has arise. So definitely yes, the role of tax professionals got increased. Even before that introduction of this section, those persons who were filing the return on their own started filing through tax professionals. So after all these amendments, definitely yes, it is proving better to our tax advisors only. So now for the time being, definitely yes, it is an point wherein we have to get a grip over all these things. Definitely yes, we should know these provisions, then only we can advise all those provisions to our client base also, to our colleagues also, to our peer groups also. So a nice and good initiative by PRD department for arranging such a nice session, such topic at the right point of time. So definitely yes, for the last 2 hours we were discussing about these provisions in 115 BAC 1A, opting out, opting into this old regime, various deductions, various exemptions which are eligible, ineligible, various privileges for new, various privileges not for old, and all we were discussing. So any more doubts, definitely yes, we may ask. I do think the time almost over. Now to the tax research department. Anything from your side? Definitely yes. You may. Otherwise, you may end today's session. Thank you all for your patient listening.
Yes, sir.
Over to you, madam, please.
Okay, sir. Thank you for your time and thank you for the session, sir.
Thank you, TRD, for arranging. Thank you for giving me an opportunity. Once again, thank you all the participants. Thank you once again.
Thank you, sir. We end this session.
পাঁচটা পর্যন্ত একদম
তিনটে থেকে পাঁচটা। তিনটে থেকে তিনটে চার পাঁচে শুরু হয়েছে।
আমি লিখে দিই এটি এই টাইম এই
অজিত সিংহ দাস পরেরটা থেকে চেঞ্জ করতে